Hi, welcome to this video today, which is all about best Forex trading strategies for success. Now, in relation to today's video, I want to look at long-term trend following and basically macro investing. Now, what is macro investing? Well, basically, it's one of the most popular methods of the world's top traders today. Basically looking for, let's say, currencies that have really overshot fair value, become oversold or overbought, then taking a contrary view and trading trend changes and then holding the trend for as long as possible. So not just for 100 pips, but maybe for 1,000 or 2,000 pips. And those trends are out there. Now, the big fundamentals actually drive those big trends. Now, in terms of fundamentals, a lot of traders coming markets are intimidated by looking at the fundamental supply and demand situation. What I would say is you don't have to. You really are looking at the sentiment towards the fundamentals in going time with your technicals, and that's something that Leitner would do, and you can do it as well. Now, Leitner has got some fantastic tips in terms of trading long-term trends, but he's also got some great advice on basic techniques that you can use to make your trading more profitable. How to maximize the risk reward, how to get the right trading psychology. Now, what I want to do is go to a storyboard, and I'm going to basically summarize the key tips of Jim Leitner. He gives him an excellent interview in the House of Money. Then I want to finish up with his quotes, or his best quotes in my view, which beginners I think will find very informative, and also I think experienced traders will enjoy them too. So let's go to a storyboard and go through some key points in terms of achieving trading success from Jim Leitner. Right, let's look at the strategy, which is based around trading overshoots from fair value in longer term time frames. So you could be using simple technical analysis, common sense view of the fundamentals, and also taking into account sentiment. Now, you are not looking for small moves if you're doing this type of trading. You're looking for at least a decent rebound of several hundred pips, but you're really focused on trying to catch trades that can give you 1,000, 2,000 pips or more. And you don't need many to make money with this strategy. Many trades coming right, I mean. Now, let me explain it in more detail. Blood on the streets gives you the opportunity. That comes from Warren Buffett. When you get panic in a financial instrument, it very often overshoots fair value, becomes severely oversold. You can come in, you can buy, and you can hold. Now, obviously, Warren Buffett does it in shares. And he could hold for many years or decades even. We're not going to be doing that in the Forex market. So I think with this type of trading, it's a 6 month to a year max. And you're not going to hold the trade necessarily for that entire time period. I'll discuss a little bit more how the strategy is implemented in a moment. But you're looking for really oversold currencies. And here are two examples. One from last year, one I believe is extremely oversold as we start this year, 2018. Now, in 2017, there was blood on the streets. The British pound sold off hard after the Brexit vote. Massive sell-off. But if you just sat back and looked at what was going on in the British economy, nothing changed. The media all hysterical about everyone's going to be poor, the economy is going to collapse. It just simply wasn't happening. The data actually got better. So there was an opportunity to trade the British pound long. And we said at the start of 2017, the whole Brexit decline would probably be retraced. If you look at the British pound today, it's nearly retraced the Brexit decline on most currencies. Okay. And not small moves either. Some 2,000 pips or more, some 4,000 pips or more. Japanese yen. I personally think Japanese yen is similar to the British pound. It's way away from fair value. It's going to have a rebound, which could even be bigger than the British pound. And I did some analysis on the JPY yesterday, which you can take a look at, which will be the video one back from this one on our channel. Now, in terms of a currency becoming oversold, you can sometimes look and think, oh, that's oversold. I want to buy it, but you need to have confirmation, because it could be oversold, but the market, when panic sets in, can make it more oversold. So you want to confirm, okay? How do you confirm? One of the best ways of confirming is to look for the majority view to be bearish, but price action not to confirm the view. So back in 2017 with the British pound, when the media and traders were at their most bearish, what happened? The pound steadied up and then moved into an uptrend. Okay, same's happening with the Japanese yen. Now, majority view is the yen should go down, but it's not falling. It's already firming up on many currencies, and it's for us going to make a big move to the upside. We're already coming into the market long the yen. Now, in terms of spotting mispricing, the right sources, you don't, I've said this on numerous occasions, want to believe the mainstream media. They're there to tell stories. Your Bloombergs, your Reuters, they're there to make things sound exciting, put up scenarios that just aren't going to come true. Okay, you look at the mainstream media and just see how bullish or bearish of a currency they are, to look to go the other way. But in terms of common sense fundamental analysis, you could do it yourself. Okay, a lot of people are intimidated by it. Just find the right sources. And in terms of Jim Leitner, he actually points out that The Economist is probably the best place to get ideas for trading from. It is. It's a British publication. It's not interested in telling stories or being dramatic. It's interested in giving you facts, basically taking a detached view, not an hysterical view. You get some great ideas from The Economist. Now, Jim Leitner, I think he's one of the most successful fund managers in the world. He said if he just had The Economist, he could trade successfully with no other source of information. I believe that if you want to make big money from the markets and get really great ideas, read The Economist. We read it all the time. It helped us with our view on the British pound. It's helping us with our view on the Japanese yen, and also it's giving us a few other good trade ideas at the moment. Now, just said the media reflects the majority view. A lot of people look at the experts on CNBC and so forth and think they're experts. They're not. They've got not really a good grasp of predicting correctly. Okay, normally ego is involved. And the guy who proved this was a guy called Philip Teflock in a big experiment called the Good Judgment Project. It went on for years, tested experts v non-experts. And they made predictions against each other. Very often the non-experts won. Okay? And particularly in finance. So why are the experts in finance, or so-called experts, not very good? Normally, ego is involved, and they tend to have tunnel vision. They never run the counter-argument constantly against their view. And Leitner says this is one of the most difficult things to do. Okay, you get an opinion, so at the moment our opinion, firmly bullish of the Japanese yen. But we've got to constantly look for something that's going to prove our opinion wrong. We all want to look for confirming evidence for our opinion and ignore the counter evidence against our opinion. Leitner says it's a key to trading success. It's not easy. It sounds easy, but it isn't. But you can master it. You've just got to be brutally honest, okay? So you're always looking for a reason to change your view, or if you need to change your view. Now, your advantage over most fund managers, what is it? It's understanding C to E. Now, fund managers understand C to E because that's how they make a living, okay? Not every fund manager is focused on this, but most are. C2E is just simply commission to equity. If you think about a hedge fund or a big managed fund, they've got massive overhead, flash offices, cars, bonuses, all the rest of it. And they need to generate back a certain amount of commission from the equity that they manage to meet their overhead. And it's a frightening study, really, done by a guy called Jim Lacker in the hedge fund Mirage. And everyone thinks that the majority of hedge funds just make huge amounts of money. They don't, because they're too focused on commission to equity. Warren Buffett has made this point as well. To give you an example from Lacker's research, the average hedge fund will look to make back against every $1 million they bring in, 300,000 in equity. That's 30% they want to generate back in commission, fees, spreads, etc. Well, that's for their overhead. They've already left themselves making or having to make 30% to break even. Okay? So they've got to make 30% to break even because they've generated so much commission. Now, how many of the so-called great hedge funds can do this? Very few. Yeah, again, from Simon Lacker's research, the average hedge fund, how much has it made? Well, in the last 15 years, if you'd invested in T-bill interest, you'd have done double. Okay? So most hedge funds are losing, and the ones that are winning are mostly single-digit gains. Now, if you took someone like Leitner, he isn't managing equity for clients. It's a private fund that he has. So he's just focused on getting high probability trends, looking for mispricing. He's not worried about commission. And I think most traders don't think about the impact of trading too much. If you trade too much, you obviously pay fees. You're never going to catch a big trend. And, your chances of making really decent profits are not very good. Your advantage is you don't have to trade very often, okay? You can be patient. With this style of trading, you don't need many good trades because your profits are going to be so big. Okay, so you just wait for the right opportunities. Now, at the moment, I've just said we're focusing on the Japanese yen, but there's other pairs that might come into play that will fit this criteria, which will apply the same strategy to. So, patience, just wait, okay? I know I've mentioned in other videos, but a lot of traders just don't think about being patient. They want to force money from the markets. Now, in terms of the media short-term noise, understand straight line depreciation. Most traders don't understand straight line depreciation. You've got to keep in mind with the media, they have to justify everything that goes on in a day. So they'll just fit stories to fit the price action, where really it's just noise, okay? In terms of long-term trends, there is a lot of noise in a long-term trend. So let's just give you an example. Let's take the euro last year. That had a big uptrend, didn't it? What was the average move in pips per day? It was 4.38. Now, you compare that against the volatility per day, and you can see how much volatility there is, how much noise against the signal. When I do the quotes of Jim Leitner, he'll explain this in a bit more detail. There's a huge amount of noise in big long-term trends. You've got to stay out the way of it, okay? In this sort of trading, you're not interested in just every little report that comes out. It doesn't matter. Most reports don't really have any big impact on the long-term trend, okay? Same with the British pound last year. They come on the media and they say, well, housing, well, the data was bad, so the pound's down 20 pips or whatever. It doesn't matter. You're focused on the big trend, okay? So you need to understand, the noise against the signal. Anyway, I've done some quotes from Jim Leitner on that. You can see them when I play them at the end of this video. Trade management. Now, obviously,
if you're trying to hold big trends, it's very, very difficult because, yeah, when you've got a really big profit on the board, yeah, what you've got is you've got a lot of noise within the trend, haven't you? Okay, so prices, yeah, are bound to move to overbought at some point in the trade you're looking at. Let's say you're long the yen, it's going to move to overbought, it's going to have a pullback. What you want to do here is harvest some profits, okay? And Jim Leitner makes the point, and I've made the point numerous times, the one strategy, as he calls it, which is a no-brainer, is understanding reversion to a mean. Because obviously prices are going to move too far to the upside, too far to the downside, then come back to the mean price. So keep in mind straight line depreciation, okay? So when, let's say you're in a long yen trade, it goes to overbought, just take half in, get some profit in, then basically when prices retrace, if the conditions are right, and drop the trade back in at a better price, okay? And if you do this, then what you can do is afford to have your stop back outside the noise, okay? Because you're always taking in small profits. Now, in terms of this, if you do the 50-50 bank correctly, you can very often milk more money from the move. And it just basically helps smooth your equity curve. So, yeah, that is R2M banks, reversion to the mean banks. You know, it just really helps you cope with the noise within big trends. Now, in terms of exposure, this type of strategy, you don't need to risk a big proportion of your account. I often say that, 10% is the maximum you should risk if all your trades go wrong. And, that's fine, in my view. You could even do great profits with less risk exposure, let's say 5%. And what you always want to do is, when you're looking at your positions, mark them at 0, okay? So basically, what are you going to lose if everything goes wrong from the point of view you are at now? Doesn't matter how much profit you've got. You just want to see how far you might drop, okay? So that gives you your worst exposure. Now, what I'm going to do is finish up with Jim Leitner's best tips for success, which cover some of the points that we've been talking about here in relation to the strategy, but also more general tips on trading success in terms of how to view the markets, how to have the right attitude towards them. I've actually shown these tips or quotes before in another video. Not sure too many people saw that video. Did it a while back. I think they're worth looking at again. I hope you enjoyed them. Coming up now. Thanks for watching the video. Take care and have a good day.